Sorry, I can't stop smiling. I don't know why. I can't help it, man. All right. Hey, traders. Welcome to the really early stream. Of course, it's an event stream where Jerome Powell's speaking soon, FOMC. And we're about to find out, you know, just how volatile this market is. You should expect volatility. There will be, I would imagine, there's going to be a 4 to 5% swing plus on Bitcoin, up or down. We don't know which way it's going. It's probably going to be that way on everything. And that is why I have the battle station set up right now, the quad screen, of course. Bitcoin, your top left. S&P 500 futures, top right. Gold spot price, bottom left. And your US dollar, bottom right. Something that Goldman said today. Yes, Goldman Sachs. Powell hawkishness should be measured by word count. At Jackson Hole, he was brief, on message, and to the point. If that is the Powell we see today, expect to see the dollar higher and risk off in equities as year-end pivot hopes are unwound. The longer he speaks, the more potential for caveats and conditionality, wow, that the market could interpret as an attempt to do less. So you hear it. All right, we got the over-under on the amount of time Jerome Powell speaks. What is this, a prop bet for the Super Bowl for how long the national anthem is? Are you kidding me? This is what it's come down to. That is right there is like pretty much astrology, okay? That's all we got. We're all dependent on one freaking guy. Unbelievable. These market conditions suck. If anyone tells you they don't suck, they're stupid. Wow. Wow, dude. Okay, so you have a little bit of price action leading up to the event that will be in about 6 minutes. The speech, the press conference is scheduled for 2 p.m. Eastern. It is 1:54 p.m. Eastern. But my word counts, man. I know, dude. I know. It'll all be over soon. We want it to be over one day. So just starting, I guess, with NASDAQ futures, actually. You can see the range between 11K and 11.6, beholden to that level, unable to breach the top part of the range. So you've failed a little bit of distribution going on recently. You know, on the 25th of October, we made a peak, a high. Traders settled up on the 4-hour 11.6, and then on October 28th and November 1st, we have now confirmed distribution. Again, 4-hour. No big deal, man. You think where you are, you might be going to 11,056 next to test it, maybe 10.9 if things get bad, and if you break it, oh my God, good night. Okay, good night to everyone. So that's it. The yellow lines representing normally what I try to color code them. The yellow normally represents historical inflection points. The orange, local. All right, been trying to do that for a little while now. It seems like, unfortunately, right now, Bitcoin is now, you know, these are all 60-minute time scales. We seldom look at these time scales, but they're really, really good to look at during such event-driven move times, right? So the 60-minute 200-something moving average was just rejected or regarded as resistance, and then you reversed at it. There is a demand line that, you know, this is that local consolidation structure that we had identified, okay? And you're getting close to breaking that. You're also getting close to breaking this 20,441 level. It's the top of a range locally, right? You can see multiple touches that goes all the way back to late August, early September. And if you don't hold this, it would make plenty of sense to go test 19,891 because you never did. When you broke back above it, there was never a formal back test to reconfirm the validity of an area that has always been resistance. Maybe it becomes support that we don't know yet. Market participants don't know. So as I'm saying that, as Bitcoin's selling off, the index fund, the S&P futures, not really doing what Bitcoin's doing, nor is gold spot. DXY, as we know, got a little rally, but it's well off its highs. All right, you've already confirmed distribution a couple times from the buying climax for now, the highest high, which was September 28th. Remember, if Jerome Powell's press conference is short, Goldman says that this DXY will be going higher. Wow. Incredible. Incredible. So that's kind of where we are. We've had, hey, Paramount got wrecked. HiUOK's Cheeto support was destroyed by the SWAT team. Only real ones will get that. Oh my God, dude, down 11%. It is, I believe, the worst performing asset on the NASDAQ for real. And it's not even a joke, dude. I'm not even kidding. Like, and there's no formal support here until $10. This was it, right? HiUOK is like, dude, 24 bucks, man. We're holding, and we're not. This goes back to 2006. You broke it. Yeah, even this low from 2011, you're below it. There's just not much left, man. So much lower prices. This is the COVID crash low. I mean, why not, man, at this point? You kidding me? Stop making woke trash movies and maybe your price will go up. Tractor Supply, no, the Container Store, as we had been waiting for months to finally get an 886. Our dream might be coming true soon. It might be like a Paramount movie where we get to see $3.80. The pattern completion zone of the massive bullish shark Gartley combo, and at the same time, it just happens to line up perfectly like the Jesus to the major inflection point from 2016, 2017, 2018, 2019, and soon to be 2022, man. All right, let's go. TCS, one of the worst losers. Paramount, one of the worst losers. Mastech got wrecked. Carvana, that was up yesterday 7%, is now down 7%. Yeah, right. They got you, dude. Imagine buying Carvana yesterday because it was up. It was up, dude. We gapped up, man. Okay, great. No one cares. Spotify, that had been destroyed, is making fresh all-time lows today. Hi, I'm Spotify. Let's go Joe Rogan. Joe Rogan, baby. All right, wrecked. Square, wrecked. Oh, man, you don't want to be here. Square where it is. Yeah, you got the local lows here. Dude, inverse head and shoulders. Yeah, good luck with that. But I'm telling you, being below where you are right now is dangerous. Very, very dangerous. I mean, you know, you're at the point where, hey, man, you could chop and there could be support here. People could interpret these as supports too. Yeah, but man, you got to be careful, dude. If the order book is so thin below this $56 area. And the thing is, you're at these little, hey, man, eventually we reverse, but no one's really buying right now. Like, it's really tough, man. TripAdvisor, even the monthly looks okay, but oh, here we are. Hey, we got it, man. We got it. Let's go.
Look here. Look, listen.
Jerome Powell, he's coming on up. Let me pull this up for you. We got Bitcoin, insane price action. Went to 20,145. It's now at 20,500. Oh my God. I can't get this going. Price action, insane. Where is this, man? Where is he? Someone give me the freaking link, man. I don't think he's actually live yet. Can we make sure someone in the chat, in the general chat, post the link to Jerome Powell. Insane price action, as we had just discussed. 5% swings. Yeah, here we go. 2% swing so far. 2.27%. You're now, hey, look at that. The whole demand line is held. So you're breaking back above that 200 moving average. And if you're doing this, sky's the limit. I mean, 21,170. This is real life. So you got pumps going on the S&P. On gold, gold is pumping. The DXY is dumping right now. But remember, this is before he has actually spoken. What is happening? What's that? This is volatility that you can expect. You can actually, you know, as traders, we don't expect anything, right? Because it triggers emotional responses if it goes the other way. But in this situation, you're not trading. You just understand and know there will be volatility, right? So you can protect yourself, you know. But look what's happening. It's kind of amazing. This is great so far. Huge pump happening in crypto. in gold and on the index funds. Go figure, right? He's not even speaking. Yeah, you got to wonder, with him not speaking and all this happening beforehand, what's going on? You know, it's like, is this going to be good, man? I can't find the link, man. It's like, you think the way it's moving, he's speaking, right? But just as easy as it goes up like that, it can go down. So just understand. Half an hour. Well, it said the press conference was at 2 p.m. So, I mean, you tell me. 30 minutes. Well, that's fine, man. I don't really care. We can stick around. We can hang out. This is the price action we're looking for, isn't it? So I'm glad we're getting that even beforehand. But it's those algos, man. It's those bots going off, and we can take a look. Let's see. We got any kind of big movement on individual assets? Not so much. Oh yeah, you got ODP Corporation. Wow, ODP is pumping up 6.45% right now. Insane. And look at that. You want to talk about a spring back test? Look at this level. You gapped up, sprung, then you back tested the spring on the 26th of September, and look at this. Look as you're running. This is the composite, man. These are very subtle signatures, and what can happen off of those very subtle moves. It's insane. Caesars, you know, they reported their best revenue ever last month, right? Record revenue for Caesars Entertainment. As you can see, the rally gapped up, so 5%, but is it making higher highs? No. In fact, it's just made its lowest low of the bear trend, and it's still maybe working on its lowest high. You need to take out $50. It's kind of crazy. It's up 5%, but still, still making lower highs. Oh, the news notes were released. Okay. 75 basis points announced, and that's in line. That's not abnormal. They were saying if it was a 50 basis point increase, the markets would be up 10%, right? So the fact that it's in line is a non-news event, but the market, of course, will react like it because you are in extremely illiquid conditions. It is extremely easy for big money to move these markets. It's very easy. And the lower we go, the easier it will become. So you now have gold spot price at its highest levels since October 28th. Very good. We were just talking about the two lows here. As long as wherever the sell-off occurs, as long as it makes a higher low than the low from October 21st, it's still a valid potential confirmation low, at least for a little while. But the verdict's still out. And again, man, the best laid plans of mice and men. You better be careful because, yes, you've got the news, but Jerome Powell, it's like the earnings report came out, but we have the conference call coming up, which would be Jerome Powell speaking. So you just can't really trust this, but it's nice for now. It is nice for now. I mean, he starts speaking within a flash. Within 15 seconds, we could be right back down to 20,400. Everything could start dumping again. The DXY could start pumping again. But it's good, though. You're seeing the DXY dumping and falling to the lowest price of the month right now. Yes, you've just hit the lowest price since October 30th. And that could continue. If the market, I mean, the market's right now saying, hey, we like that. We like that there's no surprise. We like that the interest rates are going up at record levels, at record pace, and you have credit card debt at all-time highs. You have interest rates for credit cards at all-time highs. You have U.S. consumers' savings accounts now substantially below COVID crash lows. So, hey, how can we afford a house? Oh, you can't, dude. You can't afford a house. I mean, it's funny that Dave Ramsey talks about buying a house now is is like a good idea. He even actually said verbatim, I heard him say it. It was in the past week, that now is the best time to buy a home. Do not believe that. That's crazy. I can't believe that guy would say that, because he's a relatively sound guy. But I think his whole point is the interest rates are just going to keep going up. Yeah, man. They're going to keep going up, but the housing prices are going to fall. So he's like, hey, buy a house now, which I think is the worst time, because you're in this like transitionary period where the housing prices have not been able, because they're lagging, right? It takes time for the housing pricing, housing market prices to go down off of this. We're still elevated, very elevated, and they haven't had that much time to catch up. So you're talking about really high interest rates, over double interest rates from like what, 7 months ago, 8 months ago, and the prices are elevated still. That's a terrible combination, man. So no, if you're paying cash, sure, but the problem is most people don't have cash, right? Most don't. So Bitcoin nearing its session highs, S&P same thing, and gold, of course, same thing. So you have the I have gold up here too, because they're all correlated, man. This is the Rudy Poo market we're in. It's like crypto, it's like Bitcoin and altcoins, man. It's not much different anymore. Besides US oil, they're all about the same. PMI data, CPI, yeah, sure. All of it, man. It's like every time these get reported, it's like an earnings report for the dead market, the illiquid dead market. You're still overpaying even with cash. Certainly, cash. Yes, certainly. That's like why it's like it's not the best time to buy, even if you're a cash buyer. Absolutely, I agree with that. You just wait, man. Let the cards fall, man. The problem is with the real estate market is the lack of supply, and a lot of markets lack of supply. But you can already see in certain local economies, you have $100,000+ price reductions. Gold continuing to climb, session high 1664. Gold a little bit zestier, a little bit spicier than Bitcoin and S&P right now. This is a $10 trillion market cap asset, chat. Yeah, not a joke. Takes a lot of money to move gold. But really, we got what, like 20 minutes? We got 20 minutes, man, until Jerome speaks. Got NVIDIA, one of the top gainers today, up 4%, as well as AMD being up 4.2%.
Is that a joint?
No, it's not a joint, Elon. Chill. Looking at NVIDIA, it doesn't stick out as like good, right? It's at that heart line of the downtrend. I would think that easily, NVIDIA could go fill a gap not only at 150, but if you're not going to fill a gap at 150, go back, test the September 2020, November 2020, February 2021 peak. Go regard that as resistance, because you never have. Market participants need to know that that level is now going to be reconfirmed as resistance. So it's on its way. Earnings, a couple weeks, November 16th. But, par for the course. Yeah, you get massive drawdowns off of a very well-established bearish harmonics with type 2 returns with bearish divergence. It was gorgeous. It was the Jesus, man. It was perfect. And it had drawn down so much. But guess what it did? It drew down to a point that made all the sense in the world, where if it held, then you could rally and run to the next level. That it fell below it. Right? We know that it fell below it. But guess what? There was no follow through. A bullish engulfing candle got you right back above it. And that's the whole, there is no bearish breakdown when that happens. People get so stuck on, oh my God, we broke the support. I guess it's straight going. It's going 100% down to $73. Nah, man. What kind of follow through do the sellers have? There was none. So it's not a breakdown. So now you're rallying to the next inflection point. It's pretty simple stuff. Like once you learn that, you know it forever and you don't have to worry about it. But I emphasize that a lot, because I think that's a really important thing about traditional technical analysis. It's never about the breakdown itself. It's always about the follow through you receive after the bearish breakdown. Okay, going back to the quad screen, the battle station. The Ethereum price bugged. Yeah, sorry, man. I'll fix that. Did someone post that link even the upcoming link to the event. I just want to get this here so it starts playing and I don't have to worry about it. Dealer. No. Oh, there it is. Thank you, Troy. I'm sure other people did too. Yeah. Yeah, other people did too. Thanks everyone in the Discord, man. Discord's amazing, dude. It is. I'm gonna have this max bidding volume, okay? So you can hear it when he starts talking, because I'm not gonna be able to look at it for a sec. Bueller. Oh my god. I can't do it because it's got its own music playing, right? Alright, just let me know. Start spamming the chat, everyone, when the podium is shown with video, okay? Just start spamming as hard as you've ever spammed in your entire life, okay? Wow. Discord's a party. It is a party, man. General chat is certainly a party. Like, it's 24/7 party. I mean, the way our Discord is, it's like we're in a bull trend. Like, it is, like our Discord, something happened in the past, I don't know, 6 months, but it's really this past year, man. I think it's like we all knew how screwed the market was. We were all allocated properly for the dumps. And we were all protected, so we're all in relatively good moods because TA saved our portfolios. So we're all in this together because we respected the TA. And when you respect the TA, look, we put the TA, our lives, in the TA's hands this year. When we confirmed distribution after the all-time high, I mean, this was it for the whole market. Late March, early April, it was over, dude. We were screwed, and we've been screwed ever since. And we're not screwed, but we're saying the market was screwed. We would have been screwed if we did not take heed of the confirmation highs that confirmed distribution right here. This was it, man. One does not simply make the highest high ever, then crash, virtually crash, then make a lower high, then a lower low. Uh-oh. When do we ever do that? We don't. But then all of a sudden we had a run, and it was a higher high slightly, but we understand, even if you make a slightly higher high than this high is lower than the highest high. This is the same high. Confirmation of distribution, collapsed. Bear market rally, okay, great. And what'd you do? You hit the supply line, the 200-day moving average, you rolled over again. But yeah, I get it, man. Like, this could be a short-term bottom, one bottom, the second bottom. All the divergence was there. There's no bearish edge right now. This thing could run to 4,058. It really could, and it would still be a bear market. Do you get that? The most discernible event on this chart is the lowest low of the entire downtrend. You're rallying, and you'll be working on eventually making the lowest major high, the major lowest high of the downtrend, and it will be anywhere below 43.26. When you start breaking 43.26, you might have something, or we're talking about a potential trend reversal, a major trend reversal, but that's the cutoff. That's what first has to be done. That has to happen first. Okay, so big one's still elevated. Top left of your screen, 20,662. Of course, the volume came in on the 75 basis point increase. The whole market loved it, except the DXY, which is inverse correlated to everything. The VIX probably hated it too. I don't even need to look at the VIX chart to know it dumped too. Yikes. Von Go, what is it? You have a 10 Ethereum offer on an NFT you want right now? I'm confused. What does that mean? You have, oh, so you're gonna spend 10 Ethereum on an NFT. Dang, man. You don't hear about that these days. With 99% of all volume gone from the NFT market. Ethereum just hit its highest high of the day. Let's, if you want to, we can run to that. I've got that up on my screen too, just not for y'all. It's my secret screen. Ethereum, going for it, dude. Ethereum going for 1730 area probably. Bitcoin 27 or 20,700 and climbing. I mean, dude, at this rate, if this keeps going, we could be at 21,150 real fast. Okay, here's your Ethereum chart. As you can see, highest highs of the day. And this is continuing. Remember, we were talking about yesterday how it looked better than Bitcoin in ways where it was so strong like that you could barely discern the low from this low with the same type of hidden bullish divergence developing. So this is starting to play out, but again, it's all event driven. We might have a run for the next 15 minutes. And after that, who knows, right? It could continue to pump or it could just dump, man. Yeah. Yeah, I don't know, man. Did he follow up on that? Did he follow up on that? The 10 Ethereum. Oh, man. We almost had a bad thing happen last night. One of my friends, who's like a awesome viewer, member of the community, he was trying to buy the legendary Bitcoin Gartley. There's only one. It was minted one, and it sold for like, I think it was like $2,400. But he was trying to buy it, and he put a bid in, and I'm like, wait a second. He said, you own it. And I'm like, no, I don't. I don't own that. It was minted, and someone bought it, and I don't have it anymore. And he said, but it says, and I'm like, oh God. So there are like scammers on Rarible that are impersonating my account. So just please, I announced it in Discord last night, but just please make sure you're looking at the right Rarible account. How you know it's the right Rarible account? I have zero following. I am following 0 people. I have like 420.
Is that a joint?
I have like 420 followers, and I'm following 0 people. So that's how you know. So still Bitcoin elevated, gold elevated, S&P elevated, but a little off, and then DXY pretty wrecked. Just made its lowest lows of the new month. It's only the second. I get it, man. I know it's crazy, right? The 10-year yield. Oh, let's look at that. US 10-year down 4%. What? It's trading like an S coin. What are you talking about? 10-year yield. I'm looking at it. It's 1.2% down. This thing's still so elevated, man. So elevated. Eventually, it will roll over when the recession really gets going. That historically happens. But, dude, look at all the bearish divergence, too. Why is it not rolling over yet, man? I'm looking at this extremely real bearish divergence and no dump yet. What? And it's holding. This is the problem, man. Look at 3.94%. How are you still above this level? This goes back to, where is it? Maybe I can't even see it on the daily. I have to go to the weekly. Okay, right. Look at this. It's still above this. This is a key inflection point from, look, I mean, 2004, 2005, 2009, 2010. You're still above that. Oh, and the log scales you'd broken out like a long time ago. This was the old log scale supply line breached. And yeah, man, the weekly, there's actually bearish divergence developing on the weekly too. As you can see, a high. Now you're working. There's the higher high, but lower levels on the oscillators. Both of them. So it is, if the TA is respected soon, you'd be getting a pullback, but remember what happened to DXY? It's now triple bearish divergence on the weekly and still kind of really elevated. So Aqua, you don't have to try to make sense of the moves today. This was gonna happen no matter what. It could have just as equally gone down the same percents that these assets are up now. We just, you can expect volatility in such illiquid market conditions. The market moves are just driven now by the Fed and the Fed's announcements, the Fed's projections, what the Fed implies, what they're cryptically saying. Goldman talking about how long the freaking conference is determines how hawkish he is, therefore how bad things might get. But guess what? No dump so far, only pump, only goods. And I'm okay with this, all right? I'm definitely okay with a pump, okay, anytime. Because look, man, I'm not rooting for things to crash. I'm not rooting for the U.S. economy to collapse. But we do know the data. We understand the trend. We know those things are all going on. So why fight any of it? How bad the data is. I'm not being negative by just not wanting to participate in such a terrible market condition, but we know how the market's been bearish for so long now. And now you're hitting inflection points, not once, but now kind of twice, and failing for the second time to break below those inflection points. So that after that stuff happens and you show bullish divergence on daily timescales, sometimes now I think the weekly's showing it on the index funds, you could get a relief rally that could take you higher than you think. But until it takes out the previous highs, you're still in a long-term downtrend, but bear market rallies happen all the time. All right. So we are patiently awaiting the conference. 9 minutes and counting. Thanks for the nearly 1,000 people tuned in. If you're enjoying the live stream, hit that like button, the bell, that sub. Thanks for being here. Because you could be anywhere. And I'm just trying to cover the markets to the best of my ability. Live price action. So when he begins to speak, I will mute myself and you will be seeing all these charts with Jerome Powell in the middle, like the Brady Bunch. Okay. He will be Alice. Only boomers will get that reference, but whatever, dude. Just drinking my espresso infused coffee today. Altcoins, of course, loving Bitcoin moving. We had been monitoring Doge rather closely because of its insane price action. It is only down 3% today, where at one point I believe today it was down 8% or more maybe, but it's okay. Like, this is fine. Like, look at Doge, man, on the 4 hour. What's the problem? Oh my God. Chat, do you understand what could be developing here from the low to the higher low? Oh boy, here we go again. What did we call it yesterday? The meme animal spirits are on this chart. They are. So that's why I was saying, man, shorting this could be folly. Because, yeah, maybe some 4 hour bearish divergence develops and stuff, a shooting star. But at any time, man, the squeeze comes. And now all of a sudden, if this holds, which it may not, because you never know what's going to happen when Jerome Powell speaks. But dang, dude, if this isn't still pretty nice, the momentum is in the bull's favor on this, if you haven't noticed. And this could be a runaway freight train. I mean, I know that right around 16 cents is the 886 from the major high before it, but you're talking about, you just don't know, because fundamentally things have changed. I'm telling you, I said meme animal spirits because Elon bought Twitter. Before this pump, it was leading up to him. We knew he was going to buy it. And then, when everyone knew he was going to buy it, that started pumping. And ever since then, it's been a freight train. So I don't know. It's like, you could short it, I guess, man. But dude, everything got to such low levels that shorting has now become it's like higher risk shorting the markets, because everything's been destroyed for years. Like, where have you been? If you've been shorting, you're shorting now. Like, where were you during all of this? Were you shorting then? Probably not, because you made good money and you're not trying to desperately short something now, but I get it. I understand maybe, like, there's nothing wrong with shorting bearish divergence on an asset, but there's something about Doge and Elon that it's weird, man. It's really weird. Bitcoin's still elevated. These index funds, gold, everything doing well right now. But we got 4 minutes till Jerome begins to converse with us. Who's gonna super chat? Jerome, okay. Oh, thanks for the 250 likes. Wow, that's pretty fast. Holy crap. We got this, man. We can look at other assets. All right, what asset is killing it now? Well, it happens to be Litecoin at a very real resistance that if you break this for real, which you haven't been able to really break it for real, like ever. My God, dude, this whole year, but since you broke below it, but breaking this, you can go to $73. Litecoin is very strong today. Charlie Lee celebrating? No, because he doesn't own any because he sold it for not conflict of interest, right? But nice that it's up 11% on Bitcoin's pump. The altcoins are gonna react. What about BAT, basic attention token? Let's go, baby, right? It was the shark. I have evidence that what is it?
I have some evidence,
Man, bat shark.
I have some evidence,
Man, bat shark could be in this area. It's like you were above the level, you got back above it. It's just like, hey man, it may not play out, but it was a nice start, and you're still kind of near the lower end of risk. I mean, it's just the bottom of the range, the top. You get a bottom and top, bottom and top. Are you shorting down here? Well, a breakdown. If you're shorting a breakdown, you better catch the follow through. If you don't catch the follow through and it breaks back above the support, it's a failed breakdown, and therefore it could rally all the way to 44 to 47 cents. What about Zcash? Zcash, it fell below its support, but the follow through just never was there. And now, but still, it hasn't really broken back into the range, right? It's kind of verdicts out on this one, but let's see if we could plot some sort of supply line. Yikes! Yeah, that's a supply line if I've ever seen one, right? So you're not above the supply line, you're not above the inflection, you're kind of still broken down out of this, but it's one of the top gainers today. It's up 3.5%. Chain link that had looked pretty good. It was showing that accumulation argument right here. You're above a major inflection point. You're now above the 200-day moving average. In fact, what you're doing is springing and maybe back testing the spring. Now, again, all this can change in 2 minutes when Jerome Powell starts speaking. The market could reverse, but the market could also continue. Like you could go from where you are now and double it, double the gains today, or take away all the gains and then dump. Man, it's such a casino. This market is such a casino on days like this.
Bow to your sensei. Bow to your sensei.
Bitcoin near its highs of the day still. Gold at its highs. S&P near its highs. DXY wrecked. And it should be time. We have less than 1 minute. We have 30 seconds roughly. Yeah, anything connected to Elon except Tesla, man. Really. Patiently awaiting, man. We are patiently waiting. Elon tweeted something, so I'd imagine something good. I don't love the bugs. I've never loved the bugs, never will. Okay. Any news organization that says I love the bugs, fake news. All right, here we go. Let me what the dude? 2 seconds. We have the panel. We have the whatever going on right now. Let's see, how are we doing this again? We can see all the prices. All the prices. We have gold spot. I don't like this. I think that's good right there. Okay, perfect. So the only you're not going to know. This is the DXY on the bottom right. What I could do maybe. This would be this high IQ stuff, man. But like, don't know if I could do it in time. Someone let me know when he's up on the podium. Okay. All right. He's talking. Oh my God.
Stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh boy, that was super short. You know we're screwed, Chad. Dump it!
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement. Because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean. And we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick Tamarosa of the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward, a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, people who publish an assessment of underlying inflation.
Thank you.
Gina. Hi, Chair Powell. Thank you for taking our questions. Gina Smilek, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we're now 18 months into this episode of high inflation, And we don't have, a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing that I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy, whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting a new summary of economic projections which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
We got a reversal going on, Chad. We're getting wrecked.
As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of the labor market, consumer demand. A lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. Sorry, was I getting to your question there? Oh, housing, the housing part of it. Yeah, so, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that that's really where a very big effect of our policies is.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line, but so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening. And maybe that's there, but it's not. It's not obvious to me because wages aren't coming down. They're just moving sideways at an elevated level, both ECI and average hourly earnings. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought the data series is volatile. We never take any one reading. We always look at, 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis, and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though
New
it may be
60-minute
difficult
candle.
to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that. Thank you. The Fed has acknowledged in the past that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, and keep the public believing in 2% inflation by the things that we do, even at...
The Fed is facing 2 more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General or with anybody. It's just the Inspector General. He has the ability to do investigations. We don't really have that. So that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted. And also, you have to look at why why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up. You also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that risk assessment has changed a little bit?
Well, what's happened is time has passed, and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right. But if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road, and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it. You have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but the first thing is to find your way there.
Thanks, Chris. Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, in, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of, it's a reweighting of tenant rents. The private measures are of course good at picking up at the margin, the new leases. And, they tell you a couple things. One thing is, I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did. And now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another, they go up, and, that'll end when it ends. But there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
In theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. even in, so I think those two things do tend to to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but, and, you know, people are, and, you know, the banks that deal with retail customers and many retailers will tell you that the consumers are still buying and they're still, you know, they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
You know, it's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects. Although I think overall, I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that, you know, our job is going to require some resolve and some patience over time. We're going to have to stick with this. You know, that's just we take all that as a given, but we know what our objective is and we know what our tools can do, and that's how we think about it.
Thanks. We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path has narrowed over the course of the last year, really. Hard to say. Hard to say. You know, again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to, ordinarily there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. You know, again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And you know, our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now, and it really hasn't. Although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
All right, there you have it, chat. We got Jerome Powell saying a bunch of nothing. A bunch of nothing. Hold on a sec. All right now, all right. Thanks so much for everyone being tuned in. You could be watching all this stuff anywhere, but you're here. I appreciate it. We have now the end. We now have Jerome Powell off screen, off the podium, and the markets doing exactly, and I'm talking exactly, the opposite of what was occurring 30 minutes before he came to the podium. Right? You can see Bitcoin saw a high of $20,800. Currently at $20,480, holding up better than all of it, right? Gold saw a high of $1,669. Ooh, nice, dude, nice. But now at 1645 and is about to take out the lowest low of that 60-minute candle where the volatility was highest. The US dollar now rallying and getting closer and closer to its highs of the day. Just the 60-minute charts. These are 60-minute, not significant timescales. Not trying to do TA on them. But as you can see, the 200 moving average on the 60-minute, you fell below it and now you're back testing it as resistance. It seems so far. S&P 500, top right. The Standard & Poor's. Did you like it? The symbols here, the gold bar, the Bitcoin, a little cute addition. All right, we'll have that from now on. Anytime I do these. Okay, let us continue to monitor these markets. Might as well stay on the quad screen right now because it is very, very, very appropriate as we're watching price action. You want to be paying attention to all the markets right now, and this is a great little screen for it, isn't it? NASDAQ's also near its lows of the day. It is now, in fact, lows of the day. My God, you just hit it. Like the Jesus, 11,080. Nearing the major or massive inflection point from history. This 10,938 to 11,050. You're almost there. You've confirmed distribution, unfortunately. Remember, what's so sad about all this, okay? What is so sad? Let's just talk about the candle closes, not the wicks. Traders settled up on October 5th at the high, 11,654. Traders settled up October 25th on that 4-hour candle, 11,600. Traders settling up October 28th, 11,579. Traders settling up November 1st, 11,563. You can't tell barely, but every single time you're making lower highs. That's crappy, dude. That's like, wow. And then let's go back to the quad screen as you look at gold flushing. Gold about to take out those lows from yesterday. And there it is. The lows taken out from yesterday. Wow. And S&P now continuing to flush at its lowest price of the 60-minute candle. And soon to be taking out the lows from the last candle. The DXY is making its highest price since yesterday. After the massive... And this is it, right? I mean, it's like... It was so important to discuss what can happen after... Like, yeah, everyone was euphoric. It's like, dude, you cannot, like, bank on what's happening right now. We were at the highs, right? You can't bank on it, man. Because in 30 minutes, an hour, whenever, it could be doing the exact opposite. It is doing the exact opposite. DXY about to take out the highs from Halloween and yesterday. Whoa, you do that. Hey, man, could be going. Just paying attention. These 60-minute charts pretty good right here. To show you the happenings. All right, Bitcoin really, really trying, but it doesn't look like it's gonna hold here. This little demand line, a little off. There you go, it's pretty good, 3 touches. But you're breaking it, you're breaking 20,400, the local highs, and the target would be 19,891 if you weren't able to hold either of these levels. DXY currently pumping is now breaching the highs from Halloween and yesterday. Now the highest level since October 25th. There you have it, chat. Equal and opposite price action to the announcement of the 75 basis point increase. There you go, man. Hopefully you're enjoying this coverage. I don't know, man. It may not be great, but I'm trying my best, man. And in life, all you can do is all you can do. And guess what? That's enough. It's always enough, man. Art Williams. It's a quote by him. We are, in fact, in Power Hour. It seems like it might be appropriate to extend the stream until the market close. Stock market closes in 38 minutes. So buckle up. Let's see if this price action continues or we chop. S&P right now, as I'm speaking to you, is at its session lows. In fact, it's at its lowest price since October 28th. So definitely the lowest lows of the month of November, the short period of time we've been in this month. But real life, gold, also lowest price since yesterday. What are we going to do, man? Pretty nasty. Pretty nasty there. Yeah, that's not what you wanted. You didn't want to confirm distribution, sell off, and then make another lower high. Even more distribution on gold. That's not what you were looking for, Larry, at all. You were looking for what was happening after the announcement. You were looking for that to continue if you really wanted to see a bottom get put in short term on gold. This is not how you put bottoms in. This is how you collapse to the next key supports way below you in the 1500s. So Bitcoin outperforming all these. Bitcoin's doing way better than the S&P and gold, but still not immune to the negative market price action. S&P, another fresh low. We got the NASDAQ futures right now, breaking that 11,056 right now. Lows of the day. Not oversold either. 34 on the RSI, meaning you could see 10,938 and it wouldn't be that weird. Continuing to flush, down 2.2% and falling. Thanks, Jerome. QQQ, if you want to look at it, we can. What is the QQQ? All it is...
Technology. What is that all about? Is it good or is it whack?
It's whack, Larry. It's whack today, and $267. Remember, hey man, is this an inverse head and shoulders? Not. Probably not. It's not a head. It's not an inverse head and shoulders till you break the neckline, which is 284. You never did that. If you start falling below 267, completely invalidates the idea's existence. The DXY right now, as at its highs, pumping, continuing to pump. Gold continuing to dump. S&P continuing to dump. We have price action, Larry. I'll tell you this. I'll tell you one thing. Despite any up or down, we're certainly getting what we bargained for, right? Which was just volatility, price action. Beautiful. Bitcoin now starting to see some lows on the 60-minute candle. 25 minutes into it, we just saw the lows. We got a decibel check. Make sure the audio is good here. Where it looks like most of the party is happening after the conference, after the press conference. Yeah. So we still got a few people in here, about 1,000 of you. Thanks so much for being here. We're getting more price action now. So don't know why you'd be leaving after he gets done answering questions. Most of his answers were word salad and bullcrap. You gained no illumination, except maybe from reading him that he really doesn't know what's going on, man. Like, he doesn't know that. What I got out of it was that question about how much more narrow it's going to be for, or less likely it's going to be for a soft landing. Remember, if you're out there and you heard the word soft landing before, you understand not once in history have we ever had a soft landing. They're telling you something that's they've never been able to do before is going to happen. That means I'm telling you it is not probable. They also told you inflation will be transitory. Amazon hitting fresh multi-year lows. Let us go to the Amazon chart. Chat. Here it is. Oh my God. Lowest price since the COVID crash. Lowest price since March 20th, 2020. Big yikes. Can we get some yikes in the chat? Some goes in the chat? Here it is. The target's 84.46. There's nothing really there. It's up and down. Okay. So continuing to flush. And you can imagine Google, same thing. Look at this. The bear pole bear flag was the Jesus. The gap fill is the target, 83.61. We're on our way. See you there, the October 2020 low. The gap. We are rolling over. Could you imagine Microsoft doing anything different? Nope. Microsoft rolling over. In 33 minutes, Microsoft will be achieving its lowest daily candle close since January 2021. In 33 minutes, Microsoft will be confirming a massive bearish breakdown below a key inflection point. Bear drums. Bear drums. Somebody hit the bear drums. But dude, what about Apple, bro? What about Apple? Apple rolling over, rejecting the 200-day simple moving average. Still above 145, but probably not for long. Not for long, Larry. A lower high than the previous side, than the previous high. Remember, the composite operator has been offloading his position of Apple very quietly. Very quietly. So, somebody is here. Somebody is at my property. Okay, it's just my contractor people. Hold on. All right, we got S&P 500 session lows and dumping. Top right of your screen. Oh my God. Bitcoin dumping near its session lows. Gold near its session lows. DXY pumping multi-day highs. In fact, it's the highest high we've seen in a week. We have some real price action today, and it was the inverse of what we initially received. Incredible. Apple session lows. What was the other one we didn't look at? Microsoft, Apple, Google. Come on, what was the other one? Microsoft, Amazon, Apple, Google. We looked at all. No, get wrecked. Get wrecked. Market drivers getting destroyed. Okay. Let's take a look at some other stocks out there in the universe. Wow, the container store we looked at earlier on stream, down 12.55%. Come on, give us the 886 at $3.80. Paramount continuing to collapse down at its lowest lows. Lowest price since May of 2020, and there's no stopping this one for a long time. Wow, look at that. Disgusting. HubSpot, the tech stock, this thing probably going to 208 in time. $208. It's just holding on to these supports, not for much longer. Oh man, so nasty. SBNY, look at this one, dude. Look how effing awful this is. This thing's going to 112. Why? Look, left. Do you see the high from 2015, the high from 2017, the high from 2018? And look what you've done. Not just one time, but now for the second time with an evening star yesterday, evening star reversal. You have successfully backtested that old resistance is now resistance again, and you're rolling over. You're down 7% roughly. And I'm telling you, yeah, there are a couple peaks here, but the long-term target's 102 to 112. Banks, financials, probably so screwed, man, in time. Square, also possibly screwed. Look left. Understand this level getting taken out. We were looking at this earlier in the stream. Really bad. Really bad stuff. FTNT, very bearish. The 200-day moving average was rejected yesterday. A dark cloud cover / engulfing. It was so close. It was both. And the target's $50. But once $50 breaks, for real, understand $30 target eventually. Bear trends here. The distribution is undeniable, incessant. And S&P, where are the buyers? No buyers coming in yet on this one, as it is just at the lows. Everything's near its lows. Bitcoin is still performing better than everything else, but still below that 60-minute 200 simple moving average. Meh. Bug farming becomes the norm. Could you tell me that the Container Store actually does something with bugs? What are you talking about, man? What is this? Oh, wow, yeah. Chipotle away. Chipotle really could never, I figured they get this kind of structure, it could get up to a much higher retrace, but was rolling over. And now, you know, looks like you're going to 1383. Someone asked about this one. It is a awful gainer. What about Etsy? Etsy, awful. Lowest price since July. You kidding me? Etsy probably going to 73 bucks. You know what it probably is, right? You know what's in development here. Easy. Like, no problem, man. 50% then an 886. You've broken the bad action magnet move and go figure that the 886 just happens to line up with a key inflection point that goes back to March of 2019. It's TA Tetris. That's your target. So on Etsy, there still is another 16% downside. Yikes. It's ugly, man. It's real ugly here. And if you ever broke that, you got to understand that Etsy would. I'm thinking Etsy, internet company, probably when it's all said and done, when the smoke and fog clears, and we're talking like a year from now, maybe a year and a half, Etsy sees $38. Yeah. S&P lows of the day. Gold and Bitcoin a little off of those lows, but dang, man, that is nasty stuff, isn't it? 37.73. You don't want to take out this October 28th low. You really don't want to do that. It's a pretty real inflection point locally. Good Lord, man. Yeah, there is a lot of EA distribution going on. All it does is make lower highs now for a long time. Hey, we're going for a record, man. I've been live 1 hour, 46 minutes. This is kind of a record for the year. No one even knows what's going on. I'm not even going to say what it is, but this is a record. Maybe a multi-year record. Interesting. All right, how about DHR, QQQ alert going off? We'll go to QQQ, but look at this. DHR was it's a textbook bearish. Gartley, bat. It was perfect. Classic distribution. Now the flush, I believe, is coming. 248 broken today, and the target's 212. This is a trade setup, I believe. DHR, a trade setup for sure. It's slow going, but you got to understand what's happening today. Massive levels broken, massive downside potential on this breakdown. If it's real, you got another 12, 13% downside. Yeah, 13% downside. This is what you're looking for. You're looking for this stuff in bearish markets. Okay, you're looking for W shapes with type 2 returns. There you go. You broke it, man. You broke. I thought I was gonna. I should have maybe said nothing, but I at least said nothing to the degree of what, right? Because what we did just hit a record for the year, and it might be a 2-year record or 3 years. Yeah, I don't think we've gone. I mean, I've never gone a stream an hour and 47 minutes in with 0 tips. That's not happened. So. Wow.
Double Down tipped $100. No records on my watch.
Ah, man. We were close, dude. We were close. I wonder if I'd have just kept my mouth shut, if we would have gotten away with it. I don't know, man. It was just interesting. That's a phenomenon, man. Certainly a phenomenon. I think people were just immersed with the price action. Dude, I can't get off this chart because it keeps happening. We keep hitting the lows of the day. Lord. Oh, whoops. Sorry.
Thanks for streaming, Mitch. Powell just purple tie. He's worn in every meeting and went silver. Is that a signal?
Purple tie. No, he's just nonpartisan, dude. Right, purple. Or he's obviously an LSU fan since Alabama's playing LSU in Baton Rouge this weekend, and he doesn't want Bama to win because he knows if Bama wins this and runs the table, they're probably going to beat Tennessee or Georgia in the SEC title and be in the playoffs. So, yeah, he's probably just rooting against Bama, I would imagine. All right. There's something. Thanks, dude. Was that you, 1,000 Mountains? Or was that, yeah, that was,
Was going
700.
to tip before, but the chat disappeared. Cheers, Mitch. Tough times equals pea-sized tips, ha.
So blue. Yeah, whatever. It's all good, man. Not like a big deal. It was just, I don't know, man. I'm not even mad. It's like, you know, Ron Burgundy's dog eats the cheese. I'm not even mad. I'm kind of impressed. It was to that degree, you know. Like, I can't even believe it. Oh, wow, that's loud. Sorry. Should be better now. Can we get an audio check? I had to change up something. Oh, there are plenty of chat going on. All right, Bitcoin off the lows, man. Again, Bitcoin's performing substantially better than the S&P and gold right now. Audio's good. Fantastic, man. Fantastic. All right, so DHR, screwed. So let's keep looking around here. anything noteworthy? Oh, with the space bar. Some of these just look really shaky, man. Like, they don't look great. Let's take a look at Facebook. Hey, let's get our daily Facebook update. Our Zuckerberg, the Kuckerberg update. New multi-year lows today, just moments ago. Moments ago. Facebook hit its lowest price since January 2016. I'm gonna plot this right here, just for fun. It's just a level where you V-shaped. 2016, man, that's just insane. The end of an era, for sure. Yeah, dude, there's no hopium on a harmonic here. I mean, the 886 is like, what is it, $60? I think the global 886 is $60 or something. So I think you'll probably see that. Yeah, so just get wrecked, dude. I mean, that's all I can say about it. Go back. All right, so off the lows. Everything off the lows a little bit.
Thanks for the stream, Mitch.
What's up, Metadome? Thanks for the 886 contribution. Much love. Thank you, dude. Yeah, that DXY wick is insane, man. It really is. It doesn't, you know, from the low to high, 1.45% swing. Meh, that's pretty crazy for this currency pair. The world reserve currency chart, that is pretty wild, man. Dude going, oh, PayPal, get wrecked. Hey, PayPal reports today, I believe. No, tomorrow. They report tomorrow, so you better be careful. It's a confirmed 3 falling peaks, but understand, earnings and events that occur that are news driven, that come out of nowhere, right? They can ruin this argument. So it's a real confirmed pattern that you've broken the confirmation line, meaning it's a bearish breakdown. You're breaking below a key inflection point. It's very real. It's the COVID crash lows. You are below it. You're going to confirm in 20 minutes that you're below it, and you could be going to $72. But the issue is earnings, man. Earnings happens. It misses on earnings, right? Guides down. Doesn't matter, because everyone that had money, they knew it and said, and then they buy it, and it's up 20% tomorrow for no reason, really, just because he was priced in. You got to be careful with earnings, man. It's terrible, though.
This week from 36 cents.
What's up, John Dude? Thanks for the £17.99 super chat. Yeah, dude, we will take a gander at it. Gold near its lows of the day. S&P as well. PayPal, man. It's like I'd own puts. I'd be short as F on this if I didn't know there was earnings tomorrow, or there wasn't earnings tomorrow. This is like an ultimate short. It's a long extended bear trend. You just came off a bear market rally. The classic distribution came in. They're letting you know. And it would soon be accelerating if earnings doesn't wreck it.
To something. Whoever didn't place shorts really need joined. Poor Larry, he's going to be homeless for next few months.
Is that a joint?
What's up, Amar? Thanks for 420. Larry's already homeless, dude. He can't even afford internet. He doesn't even know what's going on right now. He already got wrecked months ago, dude. Wrecked months ago. Yeah, Larry doesn't know what's going on. Do you really think Larry turned in his homework? Let's ask.
Is this your homework, Larry?
No.
See what happens, Larry?
So we got 18 minutes. 18 minutes till the closing bell, where, remember, 20% of assets on the S&P 500 reported earnings this week. You probably got getting closer and closer to half of them reported. So let's keep the space bar going. Let's keep looking for notable assets. Things that look bad.
Mitchie, these stocks gonna make my grandma homeless. Although, she does hold some Pulse Dogecoin and is mining Pulse Bitcoin, so I think she'll be fine.
Yeah, dude. Yeah, she'll totally be okay because she's in Post Dogecoin, man. Post Malone Dogecoin. Con. Yeah. Thank you, dude. Thanks to 20. Was that a low-key request for Pulse Dogechain? I don't know, man. I just don't know. Thank you. So just over here looking at CCL, regard a level from history. Is it long history? Yeah, I think so. I don't even know. Why is this here? Must be the local low or something. Oh, it's the candle low close. Gotcha. From March 2020, you're below that now. So you're probably heading to $8. You ever break $8, you're going to $6 again. It's terrible. Look at this downtrend. It's so nasty. CCL, cruise lines, a bear market rally to go confirm an old candle low close from COVID as resistance. That's terrible. That's like the worst thing you could ever ask for, and an open gap to boot. I mean, it's almost going to be. I think looking at this chart, it's almost guaranteed that this thing's going to fill in time. 7:30. This will fill sooner rather than later. Awful, man. Look at the hidden bearish divert. Oh my, dude. There's nothing but bearish on CCL. Even after it's already been decimated all year, it's only implying that a continuation downward would be coming next. Look at that. That's textbook. That's beautiful bearish divergence. The high, the substantially lower high, rejecting a key level as resistance. That's, see ya, CCL. Speaking of the C's, let's go to the Q's though, because my alert went off and we were looking at something else. It's nasty, man. It's really nasty. This is possibly the worst thing that could happen. I get that it's holding, and it, you know, I'm almost arrogantly being like it's not going to hold here until it does, and then it pivots and actually bottoms, like, and then it'll just be like, I can't even believe it, man. I can't believe it. But the fact is, you broke back above it, and you've already back tested it as support before you rallied, and now you're back at it again. It's like that's not very strong. It's pretty weak. But yeah, for now, limit buys have been set up by the bots here. 267. They're defending it for. They've been defending it for like 15 minutes.
Request for PLSD. Also, are you mining Pulse Bitcoin, Midgie?
A gentleman never tells. So I'll go as far as that, Kush Blunts. Thanks, dude. The gentleman never tells if he's mining Pulse Malone Dogechain coin. Thank you, dude. We'll look at it. Just give me a minute. We got market activity. All right, we're in power hour. We're actually in the power 30, power 15 now. 15 minutes till your daily candle close. And I'll add an alert here. If I'm hearing the beep or something's going really bad. This is not a joke, dude. This is not a joke at all. It's a low right here to the cent. October 2020, breaking that minimum target of 260. And then below that, 237. And think about Google, Amazon, Microsoft, Apple. Think about them. How much lower they're going if we're seeing 237, or if we're testing the parabolic trend line that goes back to 2009. Remember? 2009. Curve line, tested, all 2018, COVID crash. Why not again? 253, easy. But probably 237. And that's not even a real support. I mean, if you're falling below 267, the next real horizontal line support zone is down in like the 180s to 195. But dude, we're at 267. Are you trying to tell me there's not much real formal support until the QQQ loses 26 to 30% of its value? Yes, that's why I am telling you that. You want stronger formal support, you gotta lose another 26 to 30% of your value. And there's no ifs, ands, or buts about it, dude. That's real life. So just imagine where the market drivers are.
Not in the Discord.
Is that a joint?
That's right. Yeah, people are talking about you, dude, in the general chat last night. And I'm like, if you remind me, I will call him out. I'm calling you out, Kush Blunts. Why are you not in our Discord? Why? What's wrong with you, dude? You should be in the general chat, memeing with all of us, okay? Get in there if you're not. And that goes for everybody that's in here. Here's the Discord link. We got going on 15,000 members strong, extremely active community. And why would you not want to be in a community of like-minded individuals that respect the TA, right? That pays homage to the geniuses that put their life's work and research into traditional technical analysis. That is what The heart and soul of our community is TA. Not Bitcoin. Not Google. Not Jerome Powell. Not gold. Not cotton. Not US oil, UK oil that look incredible. It is the TA. It is the charts. So join it. And when you join it, you are paying respect, because that's all our community does, is respect those individuals. Wells Wilder, Richard Wyckoff, Mark Douglas, Steve Neeson, you name it, man. People that, H.M. Gartley, give me a break, man. Geniuses. Join us. All right, Qs are breaking. The Qs are at session lows. This is the daily chart, by the way. This is nasty. This is really bad. Okay? Very, very bad, boys.
Suka.
Bliat! What's up, yes, sir? Today's the 20. Yeah, we'll look at it, but remember, you got to give me a minute. Got to give me 11 minutes and 40 seconds because we're watching these markets dump. Bitcoin, not as much. Bitcoin's hanging in there, dude. Bitcoin's like, what? I mean, yeah, we broke supports and we could be going to 19,891, but nothing like what we're seeing on the index funds. Way worse. I mean, looking at the Qs, man, the QQQ, the NASDAQ 100, which is technology, about to break a key inflection point to take us to much, much lower prices. Bitcoin's not in that situation. Bitcoin's above 19,891. Bitcoin's okay. Not stocks. Oh yeah, did we? We got new patrons, man? Nuh-uh. Yeah, maybe so. Hey, how do you say that? Magiatus, Andy D, Kyler C, CT. Is that Cotton Futures? Thank you all for joining the Patreon. Please be sure to sync up with the Patreon, the Discord. You got to be in the Discord. That's where all the content is. And the premium Discord chat, okay? You get the education, trade setups, my charts, all that. The pings in the Discord. As a patron, though. That's why you have to sync it up. Thank y'all so much for supporting this channel and supporting the team, the dream, the stream, everything in between. Oh my God, all the rhymes. I know, it's ridiculous. Bitcoin was at its lows of 20,083, but it's at 20,286 right now. But guess what? The Qs are doing. They're at their lows. The S&P 500 right now at its lows. S&P futures at their lows. Look at this, chat. Throw the dang towel. Throw the towel. Shopify getting wrecked. Shopify might be a good short. On the earnings, it pumped, but look, buyers clearly unable and unwilling to break above $35. It's a key inflection point from history. It's a peak from 2019 and a peak from another time in 2019 and a peak recently. This is probably a good short. Yeah. 3.5% down today and falling. Get wrecked. I think a gap's going to fill on this one at 29 bucks, even if it holds and rallies later. Yeah. All these stocks, man. Nasty. Google. Every time you breathe, every time I breathe and blink, we're at session lows. It's nasty, dude. Look at that. 87.19, fresh multi-year lows. We got a market implosion, dude. We're crashing. I mean, Google is crashing, roughly. It's a huge market cap asset that's down 3.67%. That's somewhat of a crash. You're crashing in ways. Yeah. Just sitting some illiquid S coin that's easily moved. All right. This is a market, what we consider a market driver. Amazon, is it any different situation? No. QQQ, my alert's going off. Chat, we are getting destroyed here. Lows of the day. In fact, lowest lows since October 14th. There is an unfilled gap, chat. Unfilled gap. 260, that's the target. That's the short-term target. What else is there? There's nothing else. There's nothing else, man. That was it. You can imagine. Just think in your mind. Just visualize it. Facebook also at multi-year lows every time I'm speaking to you. Look at the S&P, lowest lows of the day, chat. We are dumping. Look at gold, lowest lows of the day and dumping. Power minutes. Holy crap, Bitcoin's kind of hanging in there. It's kind of not nearly as affected to everything. I mean, it's dumping. It's been selling off some, but I wouldn't even call it a dump. These are actually dumping, man. Index funds, spot price on gold, DXY pumping. Bitcoin's just kind of selling off a little bit, man. Nice, I like that. Holy crap, man, what an active stream. This is the one to be like, you know, watching. You know, it's thanks for the 633 likes as we approach the close of the day. And imagine being, I'm just saying, if you're reporting after earnings today, you're probably shaking in your boots a little bit. You're probably sweating like crap, dude. I'm reporting earnings after today.
XRP? Can you take a look at it, please? Thank you.
What was that, Sheriffkin? Well, with this macro, it's tough, man. I mean, it's been okay. It really has been okay. But if Bitcoin can hold in there, it's fine. But if it doesn't, you know what's going for a full 886 from its previous lows. Yeah. Only 250,000 for a digital fireplace? Dang, man, that's a deal. Where are you getting your digital fireplaces? I had to pay 700K for mine, dude. Capital. Oh yeah, let me should I change the title of the stream or just leave it as is? I don't know, man. Because the FOMC market price action or something, right? Is the VIX lagging? No, the VIX is just manipulated and suppressed because I think they figured out the volatility index. I think they got it. They know if the VIX doesn't go above 35 or 40, then they'll be able to maybe try to get that soft landing, because they know when the VIX goes above 40, bots go insane, and that's when deleveraging occurs, right? People start liquidating everything to get out of all markets, and that's what the COVID crash stuff was. So is it lagging? I think it's just manipulated, suppressed. I think this is their ultimate tool. If they can keep the VIX below 40, then you'll get no like circuit breakers triggering, insane stuff, bad stuff going on. So far they've done a great job of that, right? I'm kind of surprised. Couldn't believe it really, but yeah. And if you requested something, we will be looking at it. But again, we have 5 minutes till the daily candle closes on the stock market, and we have price action. So it's like, and we are at session lows. So I cannot in good conscience be looking at any S coin right now. Because look at gold as I'm speaking to you right now, continuously hitting session lows. S&P, continuous session lows. DXY, continuous session highs. Can the devs do something? They did something, man. Wait, could we get 700 likes? I mean, I think it's possible, but I don't know if we have the technology. What did Elon just tweet? $8. Oh yeah, $8 for a Starbucks. I'm gonna show y'all what Elon just tweeted. Of course, wonderful. I mean, it's genius. It makes sense. It makes too much sense. Look at this. Well, that's not it. Hold on. Sorry, I gotta redo my. Here we go. There it is. $8 for a stupid Starbucks diabetes infused latte, and then $8 a month for a blue check mark. That makes sense, dude. 30 minutes, 30 days. He's got an argument, man. A great argument. So I concur. Look, man, if you're complaining about Elon trying to make the Twitter business model make money, You're just a socialist, crazy communist, man. You understand before they didn't make money. They weren't even trying to make money. You know what they were trying to do? Control public discourse with agendas, suppression, censorship. That's what they were doing before. It's confirmed 100,000%. You were the product. You were the product. Now, there is a product, and they're trying to make it that way, and I'm all for that. All for it, man. Oh, we hit 700 likes. Let's go, dude. It's been a minute since we've seen 700. You steal the product when you pay. Not near as much, man. Not near as much. Elon's making Twitter better. If you don't think that, I know who you vote for. I know you don't give a crap about freedom of speech and all that, but and fairness, but a lot of us do, and Elon was included in that. All right, going back, DXY still just up there, man. Up there. S&P near the lows. We got 2 minutes, chat. 2 minutes. You're local on the 8th. Oh my God, man. You know, you're still able to freely speak on Twitter and not pay $8 a month, right? You can still do that. One minute, 30 seconds. The pump, the dump, all occurring. Litecoin mooning? Well, it was, but dang, man, I can't imagine it really pumping right now. Good Lord, man. Some of these stocks, dude, I'm telling you, are so screwed, man. Like Under Armour, oh my God, it's just so done, dude. CRM is screwed. Oh my God, just can't even. Some of these charts, man. Like they didn't really look good, and now they look terrible. They look bad. What's up, DXY guy? Thanks for the 5 super chat, man. Thanks for being a patron too. Oh, you didn't say anything. Sorry. Yeah, thank you, dude. What is it Brad said? One side wants full censorship of the other side. The side being censored just wants everyone to speak their ideas freely. Imagine needing to censor because your ideas suck. Well, the side that's trying to censor ideas, they use morality, their own self-deluded ideology and morality to say they have the high ground and what they're doing is righteous. And because of that, it's okay to censor because the others are hate speech, labels, dehumanizing the other side. All right. We did it, Chad. Jesus chimes. Oh, wait a minute. What the? Oh my God. Of course it's not working. Whatever. It was going to be fun, but there it is, chat. Lowest 60-minute candle close since, wow. You got to go back to November 1st. That was yesterday. 60-minute candles, man. I don't look at these too often. Highest 60-minute close for the DXY since October 25th. Let's go to the S&P 500 or the spider. Let's just go to it on the daily. It's nasty looking. It's real nasty. Lowest daily candle close since October 21st. Not what you want to see there. But the 4-hour was beautiful because that 200 was rejected yesterday. And look at that as you ran back up to it and just reversed at it. That's ugly. Highest volume on the 4-hour you've seen since May 4th? Dang, man. That's a lot of selling pressure. That's a lot of volume that came in. Multi-month highs on volume on the spider. And it was all bad. Oh, Benjamin's watching. Benjamin, hello. Hello, Benjamin, if you're out there. Have you been jamming? Ben, have you been jamming, man? Shout out to Benjamin, man. All right. Oh, man. What a day. I'm going to start switching over the daily charts. So looking at those, see how bad it is. Really, really, really bad looking stuff out there. Qualcomm destroyed. Oh yeah, you can be surprised. We're just talking about like if, yeah, just a moment ago, could you imagine being an asset or a company that's about to report earnings while you're watching the market dump after Jerome Powell stops speaking and gets off the podium? Well, Qualcomm was down 4%, but guess what? Qualcomm's down another 7% after hours. This blue line right here is where it is trading at. I'm glad Crypto Hoarder got out of this one a long time ago, man. This thing was setting up for lower prices. You didn't know, but now acceleration. And where you are, there's no support till $94. So where you are after hours, you still have another 10 to 15% downside before anything even makes sense. There's a gap to fill. The gap fills lined up with the inflection points where the target is. So disgusting, dude. Wow. Yeah, go to MySpace if you don't like Elon. Get wrecked, dude. Oh man, the S&P future is still selling off. Took out the lows, the candle close, the 60-minute right there. Yikes. Big yikes. Oh, what's up, Shervin, man? Hey. It's the Shervin. Google closed its lows. Look at this. Nasty, dude.
Where do you see BTC moving this month? 21K or less than 19K?
All depends, man. Really, really depends on... I mean, dude, if the stock market starts crashing, it's in the volatility increase. So Bitcoin is going to be beholden by the VIX. The good news is the VIX is manipulated and suppressed, so that's great for Bitcoin. The good news is Bitcoin broke a supply line. It's back above the key levels from 2017, but you're pretty close to it. I mean, you're less than $1,000 away from testing it again. You're even less than $1,000 away from falling below it, 19,650. So you think, I mean, like I have some cautious optimism when Bitcoin's above that zone, but when Bitcoin falls below 19,650, you can't be bullish. Right? That's the bullish, that's the cautiously optimistic and bearish estuary right there. Okay? So I can't tell you. I don't know where an asset's ever going, but all I can do is tell you that, hey, where it might be setting up for, and Bitcoin is above supports, but when the macro is so bad, man, predicting that, it's tough. Yeah, either that, Brad, or Bezos' wife divorcing him at the top, right? One or the other. Those line up also with the Olin trades. All similar, right? So J-Togs, thanks, man. God. All right, so we could go and continue. Let's see here. Everything got destroyed today. Oh, SJM still can't do it, man. Like, are you gonna react? Are you not? I mean, all right. So as of like yesterday and maybe even Friday, SJM has now officially completed a 6-year large, yes, 6-year large bearish shark pattern. And we're talking to the dollar now. The 88% retrace, there it is. You had not hit it, and it's like, are you gonna hit it? And now you have. And kind of showing some stagnation and momentum. Bearish divergence developing on the RSI up here. You just got to wonder, is this going to be the cycle reversal harmonic of legends or not? Sure as heck looks like it, man, right? Isn't this like the pristine level? Yeah, it is. It's beautiful here. Okay, this is like, if this plays out, NFT, easily going to be an NFT harmonic right here. It's like if Bitcoin's harmonic played out and we repeated history from 2019. Sure, NFT. How's Twitter doing? Twitter was up today. Can you believe it, man? Yeah, you can. You should. In fact, even after the bad stuff happened today, highest daily candle close on Twitter since November 8th, 2021. Actually broke a formal resistance too. Yeah, look at this. You actually closed above the April 2015 high. Insanity. Absolute insanity. An M shape turns into another M shape, and you're going, and all you do is higher highs, higher lows. You're a winner, Elon. Elon the winner. So whatever happens here, it could pull back. It could sell off all the way to $41, and guess what? It's still in an uptrend. Yeah, the trend's reversing here. The trend's been the low, the higher low, the higher low, right? The high, now officially a higher high. I mean, you are doing some really good stuff on Twitter. No surprise though, right? That's why Doge is pumping too. It's like the memeage animal spirits in the market. Bitcoin recovering, man. You know, when stock market closes and that selling pressure ends with those bots, man, everything kind of okay for Bitcoin. It's fine here. Can't say the same for the index funds, though, man. They're screwed. The market drivers are screwed. Twitter's delisted. Oh, that's right. Yeah, no more price action here ever again. Yeah, you're right. It's private now. It's done. So I don't know why it wouldn't be red on Twitter, right? That is true. But it was all right. So what did it do? It finished in an uptrend. That's what happened. Okay, ended its life in an uptrend. I'm sure the audio is good. Oh my God. Short opportunity maybe of a lifetime right here. I'm not kidding. PNC. Look at this.
Look here. Look, listen.
So this old 2018 high, pre-COVID crash high. We know we were in a downtrend, confirmed distribution and whatever. But look what's happened. You had a bear market scrub rally that took you up here, and look what you've done. Rejected that level as resistance, and now you're catching some follow through, and that's a long, long way down on PNC. The trend is your friend, and you've just done some of the most beautiful stuff you could ever do on a chart, ever. Okay? Ever, man. So I would not be surprised if this thing crashed in the coming weeks, months. It's been chopping. It's been sideways since May, really, but in a downtrend, confirmed. Oh yeah, lower highs, dude. Yeah, PNC. You can bank at 116 if you give me 6 months max. 116. Yeah, based on the trend and stuff. Okay. Dang man, music's slightly loud, but you said it's okay. But it's like okay, then fine. I'll just a little bit lower. Should be even better now. Yeah, so bad, man. Like that was what all we were looking for, right? All we were looking for. I'll tell you something that pretty bad's happened here on Cisco. I would imagine. I'd imagine on Cisco, CSCO. The highs from 2018, massive inflection points, right? You had a support that held, and then you rallied to that resistance. And then what have we done? We formally back tested as resistance. You kind of filled a gap too from September, and now you're rolling over. I mean, you could think 40 bucks might be the target again. It's like been an uptrend, you know, long-term uptrend and stuff. But dang man, locally. Bad news, dude. Bad news. Oh, Micron doing? Micron's been sitting at this support. I mean, this is where massive reversals can appear, right? This is not a joke level. But dude, you just only lower highs, only lowest low of whole downtrend. Down 0.41% after hours, probably because of Qualcomm. It's nasty, man, out there. Stitch Fix. Remember this thing? Stitch Fix, where you subscribe to them and then they send you a bunch of crap you don't need, but you might want it. You might want one thing out of the box that they send you once a month, and then you send everything back that you don't want. That's the model of Stitch Fix. That's how that type of business model in this market this is what you get. Fresh all-time lows almost every day. Yeah, dude. So working on new fresh all-time lows. Nice, dude. All right. Maybe if we have a second, moment's time, we could look at a couple of requests that came flooding in. For at least a moment. Let's see here. Let's see. SDAO was the first one that was officially requested. SDAO, Singularity DAO. Oh, you don't want to know, man. You don't. This is terrible. This thing's about to collapse again. You're about to collapse. All-time lows. And breaking the support that was manufactured in July. You're below it. And you're working on a bearish engulfing candle. And you're getting closer and closer to the lowest daily candle close ever on this chart. It will be, if it all stayed the same, it'd be the third lowest candle close ever. By almost nothing. I mean, if Bitcoin is selling off a little bit on this new 4-hour candle, and again, the target now on Bitcoin is 19,891.99. That is the target here. If Bitcoin goes to that level, this does see fresh all-time lows. SDAO. This was a request. That is why I'm looking at it. That is why, man. You can see it was range bound, but it's breaking the range. It's so bad, dude. Ugh. Gold. Yikes. Just gonna zoom in on Bitcoin a little bit more. You know, why not, man? Like, magnified candles. That's cool. All right. So, sorry I can't spend much time on that, John, dude. I really do appreciate the contribution. The Pulse Doge chain coin or whatever next, right? Oh crap, I forgot I have an appointment in 15 minutes. Coming up the elevator. Oh my god, you're 15 minutes early. Who does that? Who shows up 15 minutes early? This is a guy who's assessing, you know, I'm gonna have to move out of here. They're gonna have to move all my stuff downstairs and I won't be living here for months. You hear that? You understand how effed my life is right now? I won't be able to live in my penthouse for months now. And I've already gone through 3 months of renovations going on. They're still ongoing, but now I'm screwed, right? So, I can't get to these requests right now because I have to go let him in. I should probably end the stream. Josh, they will. Yeah. Let me go save. I haven't seen my ring go off yet, so. But here's Bitcoin. And why is the target 19,801? Because that's the next level, right? You're gonna go test it most likely, okay? So don't be afraid. Yeah, something similar. Yeah. They have to do that, so. It looks like I just got approved to be able to stay in a hotel tonight at least until they get me approved in the equivalents to my place. So, crap. All right. I can't get to these requests because I completely forgot about this appointment. I have to do this. This is my life, man. All right. This is like serious stuff. So, I'll be back, and these requests that I missed, I will do them as soon as I get back on stream. Okay. I'm sorry about that. Please understand, this never happens, okay? So thanks for coming out today. I'll be back. Until next time, respect the TA.